Good morning. Thanks so much for tuning in. Happy Friday to you. And what a happy Friday it is for the markets, isn't it? My name is Alex Matthew and with me is Cheryl D'Souza. This is Buy Now, Sell Now. Let's get straight to the action then. And the headline, of course, if you've been watching the channel so far, you'll know this. The Nifty 50 started off at an all-time high today. And basically the question that the market seems to be asking is, where's the worry really? Because they're pricing in the start of a recovery after we seem to have seen the peak of the second wave of the pandemic. So very quickly, we are currently holding on to gains of about 0.5% for the benchmark indices, just a tad bit of fatigue being seen in the broader markets, which have so far underperformed the benchmark in today's session. And you have the small cap index is just about slipped into the red a few minutes back, in fact, trading with very narrow cuts at this juncture. From the sectoral indices, clearly the gainers are led by the metals pack, which is shining today on account of comments that have been made on commodities by the Chinese government and also positivity about the US economic recovery after a very positive jobs data that came in overnight. So global cues are supportive, but also here in India you have the likes of Eicher Motors that's doing really well on the back of earnings, and you have Reliance Industries that was participating in the session and in fact is the top gainer on the Nifty as we speak, up as much as 3%, lending quite a bit of strength to the Nifty 50. But we are live on social media already. We have started getting quite a bit of questions. Let me introduce our guests for today. We've got Kunal Bothra and Gaurang Shah joining in on this landmark day. I'm going to start with a question, Kunal, for you. Perhaps we've been building up to this ever since we saw the Nifty close above the 14,200 mark and hold on to that. How much steam do you think there is in this rally?
Morning, Alex. I think there's a lot of steam left in this rally. You have the leaders, changing almost on a regular basis. Sectors participating, many sectors, which have managed to provide a helping hand. So you look at it this way: that in the last 1.5 or 2 weeks, you can't pinpoint to just one sector which has done extremely well and provide the the leading hand for the indices. But you have strength across the board from many of the large cap names, sectors like Bank Nifty, sectors like media, which is now popping up quite well. Auto stocks have done remarkably well. You've seen IT stocks as well playing a bit of a helping hand. So we are into a scenario where many of these large cap stocks and sectors, they've managed to play a good participation role. And I think that aspect, this means that this rally is more sustainable for the indices going forward. So I think today's move for Reliance, for example, is also one of the other indications that many of these other sectors could take a bit of a backseat, but then Reliance could probably offset the losses in those kind of sectors, and the indices can still float on the upside. So bullish on the indices yet again, but stock specific and sector specific, that churn would keep on happening for some more time.
Yeah.
All right, good morning, Kunal, and that was Kunal's view coming in on the market setup. Good morning, Alex, as well as Gaurang, and let's get going with our query segment. Our first query is from Abhishek Bhandari. He's asking, can he buy Tata Motors with a 3-year view, and what sort of target should one should keep in mind for Tata Motors? Gaurang, what's your view coming in for Tata Motors? Definitely a lot of them must be feeling left out, actually, looking at the sort of rally coming in that counter.
Well, absolutely, Cheryl, and morning to all of you all. So from being the most untouchable stock in the auto pack, Tata Motors is now the most preferred stock. And I think there is a lot that has happened in terms of business strategy as well. You have the domestic business in terms of passenger car picking up. You have a lot of new launches that has already happened, and this is likely to happen in the remainder of 2021 and 2022. Commercial vehicle business is also firing up on all cylinders. GLR, which is the largest contributor, has also shown some positive traction. We remain positive from a long-term point of view. My only request to this investor is that don't put all your money at one time. Start at the current level, maybe about 30-40% of whatever you want to invest. And on dips, you can definitely go on adding to Tata Motors. Very recently, post the numbers, we have targeted Tata Motors at about 380 to 410 from a long-term point of view.
Okay, we've got a question, Kunal, from Sagar, and this is on a counter that is a small cap. It's HIL Limited, and he points out that this is a construction materials company of the CK Birla Group, which he bought at levels of 1500. It's up and about in trade today as much as nearly 5%, and it's trading at 4,930. So he's made a killing in this one as well. Should he hold on or should he book profits at this juncture?
Well, I think it's time maybe that to look out to book profits over here, Alex. And the prime reason for that is on the monthly chart specifically. So even though yes, the stock has done phenomenally well last 12 months, 13 months, from 500 rupees, the stock has gone up to even 5,000. So it's almost 10x from those March 2020 lows. But then in this pace of rally, in the way in which the rallies moved up higher, the RSI has gone back to levels of 87, 88 for stock like HIL. Now these are starting to be very overbought conditions for the stock prices. So it's possible that it may rally up another 500, 400 points. But then the chance of topping out from a near to medium term significantly higher at these levels. So I think you should start incrementally booking out profits from current levels, and then keep on booking profits as and when the stock moves up higher. So every, I think, 150 to 200 points on the upside, you should look out to book profits over here for the stock.
Alright, our next query is an email query from Sethu Ramalingam from Chennai, saying that he is holding 59 shares of Vinati Organics with an average price of 431 rupees per share. He can continue to hold on to this counter for the next 5 years, but he wants to know whether he should partially book profit now and buy at a lower price. What's your take coming in on Vinati Organics? Gaurang, makes sense to continue to hold on to this counter for the next 5 years?
Well, I would definitely agree with that, Shell, but given the level of investment and the price at where the stock is trading, he's also asked that whether he should book some part profit. So I would definitely recommend booking maybe 50% profit and 50% stay invested, because we are extremely positive on specialty agrochemical sector and they have done well. And our sense is that for this financial year, next financial year, I think the earnings is going to improve tremendously on the better side. But purely given the kind of returns that he is making from the levels of investment, book 50% profit. By that, you will possibly bring home all your capital and profits over there. And the balance would be cost-free for you, so you can have a peaceful sleep at night.
Okay, we've got a question from Neeraj Kumar on Infosys. Got 700 shares of Infosys, Kunal, at levels of 1,395, and he plans to hold it for a year. What, according to you, should the target be for this trade?
So I think from that kind of a time frame, you can expect at least another 10 to 15% on the upside for the IT major. The stock looks attractive. In fact, if you remember, we did this comparison study for the IT stocks, and apparently two stocks managed to stand out quite strongly from the large cap IT space. One of them was Wipro, which stands to be one of the topmost candidates there, and the other was Infosys, where the stock has managed to show some very strong recovery as well over the last 12-13 months. So I think on that aspect, I would expect that if the IT sector has to perform going forward as well, Infosys and Wipro, these could be the top two candidates which can continue to move up higher from current levels as well. So if you're in that trade for another 12 months approximately, then you can look at least a 15% to 10% kind of a modest upside.
Alright, the next query is from the username AB, and he's saying that he's asking rather, has Escorts bottomed out at 11,100 levels, and is it a good time to go ahead and buy Escorts? Kunal, what's your take on Escorts?
I would give it more time, Cheryl, because what happens is generally price-wise the stock may bottom out, but then it may take a lot of time to consolidate over here. The question over is that if you're in from a short-term view, and if you're trying to play a contrarian bit of play, then you have to wait for not just the right set of levels, but you have to wait for the right set of momentum to pick up for the stock to really call it that a bottom has happened. So bottom may happen, for example, at 1100 levels, but the stock may remain sideways for maybe another 3, 4, 5 weeks. And that may not call out to be a good trade, at least from a short-term view. So I would wait for Escorts, let the stock show a credible sign of breaking past about that 1180 mark. That could be a good breakout point for Escorts. Beyond that is where I believe that a momentum, not just a momentum trade, but even taken more of a positional trade, calling 1100 bottom could be then a good call to take. So I would suggest the wait on Escorts and buy only above 1180 mark.
Pull up Amara Raja batteries. 738 is what I see on the charts, how it's trading right now. But the question is longer term query. Mehul's got as many as 200 shares that he's bought at levels of 850. This one's for you, Gaurang. Would you hold on to Amara Raja batteries at this price, considering that you are yet to see the electrification journey really start in a big way here in India? And really the prospects for Amara Raja battery, if you think about it in that sense, are humongous.
You're absolutely right. And I think you should make a preemptive effort in getting into all those stocks which are going to be the future of the EV drive in India. And with that perspective in mind, Alex, I think both the battery manufacturing companies, Amara Raja Battery and Exide Industries, as a disclosure, we have a positive view over there. And not only do you need batteries in EV, but you also need batteries in fossil fuel driven vehicles like petrol and diesel. So there is a huge new order market, and along with that, Alex, there is a huge replacement market as well. And there is also a potential of exports. We are also extremely positive with the steps that the government has taken. And I think once you have the entire issue with respect to charging infrastructure, charging station, possibly bringing down the GST slabs for equipment which are crucially going into making a safe and secure electric vehicle should possibly be beneficial for companies like Amara Raja Battery and Exide Industries. So 1150 is the target from a long-term point of view on Amara Raja Battery. And if I can go a step further, if this gentleman has surplus capital to invest from a longer-term perspective, add to your investment at lower levels.
Alright, the next query is coming in from Sherry, and this one is for you, Kunal, saying that just bought Dr. Reddy's June 5500 call at 210 price. Now the current price is 73 since they announced the manufacturer Sputnik V in the month of June. She's asking, should I hold on to this till at least that news comes out? So this is Dr. Reddy's June 5500 call at a price of 210.
I think it could turn out to be a good bet, Cheryl, but I would specifically wait for, momentum to pick up for the stock. So I think we were discussing earlier, this stock as well, that how it's formed a triple top pattern, which is approximately at 5,350, 5,380 levels for Dr. Reddy. And if you look at it last a week or two back, the stock has actually reversed from exactly those kind of resistance points. So which means that this is the third important test of resistance for Dr. Reddy. Now, typically what happens is when a resistance is getting tested time and again, it eventually yields, and you see an eventual breakout which tend to happen. But the only question with these kind of breakouts is how much time the stock will actually take to break past about this resistance of 5350, 5380 zone. So I think it could turn out to be a good bet, but I would suggest that average it out further. Unless only if the stock breaks past about that 5350 mark, that could turn out to be a good momentum play as well. So I would suggest a hold on Dr. Reddy call option as of now.
Kunal, I'm coming back to you on this next one. We've got Rajan Vittal who's asking about Jubilant Ingrevia. Would you buy at the current level for the next 6 to 12 months, or would you wait for correction? And that's quite a relevant question considering that it's had quite a run in the last 6 months and particularly in the year-to-date period.
Well, in fact, on the Chartbuster segment today as well, Alex, I mentioned on Jubilant Ingrevia, that was a stock which I had covered today, indicating that how the stock is forming a bullish pennant formation on the hourly charts. That breakout point for the stock is around 500. 500 or 502 is the breakout point for the stock. Once on that breakout, I would sense that the stock could move up at least 15% on the upside. So I would suggest that if you're looking to buy, wait for that breakout above 500 mark for the stock, and post that I would expect at least a 570, 575 kind of a target range for the stock, and stop loss for that you can keep it at 475.
All right, Kunal, the next query is for you as well. Again, this one is from Pawan Kumar, and Pawan is saying that he seems to have made a mistake by purchasing Sun Pharma June 720 call yesterday. He's losing nearly 40% of his wealth. He wants to know, is there any scope that it will bounce back, or if so, should I average my option, is what Pawan is saying. Sun Pharma June 720 call.
So I think there are a lot of important points over here which I would want to discuss. So one of them, of course, is never put good money after bad money. So if a call has not worked in favor of you, I think you should not look to average it out further, and then because the stock is or the call option or the stock for say is available at a cheaper price. So that's a big mistake which traders they tend to do. They tend to spiral up their trading for losing stocks, and that's where they tend to make incremental amount of losses. Now, if you remember, Cheryl, we were discussing the stock yesterday as well, and I mentioned specifically that you don't need to hurry up into buying the stock specifically pre-result or just prior to result, because it could play out as a double sword. Because if the stock does not break out on the upside, you may tend to lose the edge. The stock has not broken out of that 720 mark, which we discussed yesterday as well. It has to break past about 720 for the stock to try and move up significantly higher. Now the stock, since it has reversed the course, what could typically happen that the stock may remain a drag for some more weeks, and the call option may keep on eroding value. So I would not suggest to average out your holdings over here. In fact, you can look to exit even at current levels, and then look at some other names specifically from a momentum perspective.
Thank you for that, Kunal. Pretty deep analysis and explanation of what actually Pawan should do going ahead. All right, but on that note, we are out of time for the query segment today. Thank you, Kunal, as well as Gaurang, for joining us in resolving the viewer queries. But we'll be back with the viewer query segment on Monday. But for now, it's time for a break on this edition of Buy Now, Sell Now. Stay tuned. Lots lined up after the break, so don't go anywhere.
Savings is just not possible on medicines.
It is possible. On NetMeds, you can get every medicine lesser than MRP. NetMeds app gives the best offers and savings up to 20% on MRP. Now for super savings, NetMeds, India's own pharmacy.
Make a list of all your investments, insurances, and just make sure that you hand it over to all the people in your family. You need to give them that information that if anything happens to me, please get in touch with so-and-so organization or so-and-so people. If you don't want to share your personal email ID, create an email ID which is just saying like your family name. All my investment related information